Welcome to Money Talks, a series covering a range of financial topics like budgeting, understanding credit, planning for retirement, and so much more. It's all about helping you feel confident in your financial future. I'm Lila, and today we'll talk through choosing a bank or a credit union that will serve as a long-term home for your financial needs, not just a place to hold an account or two. Your financial home is where you have your most frequently used accounts to deposit your income and pay your bills. Whether a large national chain or a local financial institution, most banks and credit unions can handle the majority of your financial needs, including auto loans, checking and savings accounts, debit and credit cards, and home loans. Are there differences between banks and credit unions? Definitely. For one, banks are privately owned or publicly traded, and they exist to provide services for a profit. Some banks are huge, too. That has some benefits, including more physical locations and more ATMs, but banks, especially the large national ones, typically offer lower savings rates and higher fees than credit unions. On the other hand, credit unions are typically not-for-profit cooperatives, technically owned by their members. This means credit unions provide their members with the best rates and value possible, usually through lower rates on loans, higher rates on savings, and fewer fees. Credit unions also tend to be local and more customer-focused. Credit unions do have eligibility requirements to be a member. Some are open only to certain professions like teachers or based on where you live. For example, to open an account at Selco, you need only to live in or have a relative who lives in an area that Selco serves. Credit unions also usually charge a one-time membership fee, typically between $5 and $25. So, how do you decide which financial institution is best for you? The first thing to consider is security. The most fundamental purpose of an account is to keep your money safe. So never consider a financial institution that isn't federally insured through the Federal Deposit Insurance Corporation or National Credit Union Association. The overwhelming majority of banks and credit unions, regardless of size, are federally insured. But it's worth being certain before you open an account. Next, consider your specific needs and whether a financial institution meets them. If you pay bills online, look for an account that offers free online bill payment. If you digitally transfer money to others regularly, you want a financial institution that processes those transactions quickly and easily. If you want to grow your savings, consider how a financial institution helps your money work for you. The first thing to look at are interest rates. Remember, interest rates work both ways. You'll pay them on loans and earn them on savings. Ideally, you'll find an account that pays a competitively high interest on your money. And when you borrow money through a credit card or loan, you'll want an account that charges low interest on what you owe. All right, let's go through an exercise. On a blank sheet of paper or the worksheet from Selco.org's Education Center, list what you think is most important for you in a financial home. Then, consider both local and national options. If you don't currently have an account, this exercise can help you decide where to bank. Otherwise, this can help you decide if your bank or credit union is a good fit. You don't need to keep all your accounts at the same institution. Sometimes opting for a car loan through an institution with a lower interest rate might make sense, but you'll want to look over all the pros and cons before deciding. We hope this information was helpful on your financial journey, but there's more to discuss. Check out our other Money Talks videos and downloadable worksheets on the different types of accounts, why a budget matters, and so many other topics. Have a topic or question you'd like us to cover? Let us know.